No matter which way the market goes, we need a strategy to make us money safely. So we're going to look at both sides of the markets and we'll come up with a nice safe strategy for that. So looking at both sides of the market, obviously the market's either going to go up or it's going to go down or it's going to go sideways. If it goes sideways, all we need is a little patience. If it's going to go up, then we need a strategy for going up and also one for going down. So in terms of Elliott Wave, we can look at the market in terms of this coming down here as wave 1 with an A, B, C back for 2, and then coming down for 3, 4, and 5 to finish that off. Now you may agree or you may not agree with that, and then we'll go up for the A, B, and C up there for that. You may not agree with that, as I said, but we still need to accommodate that in our strategy. The other strategy, the other Elliott Wave count is quite simply we've got wave 1 in here, and we could probably look at this as wave A and wave B here, and then wave C. The 50-60% retracement level is back up close to the 4,000 here in this particular space, so that's where it could be heading. Now we'll need to look at this move up here, like I said, as the A wave, the B wave, and the C wave here, and then come down from that point, probably struggling to reach it at that point because there'll be some sort of relationship between wave A and C. If that is not the case, then we'll need to look at a larger pattern. So that would leave wave A up here and wave B, and then a nice decent solid retest of that 4,000 with wave 1 here and 2 here, and 3, 4, 5 for the A wave, the B wave, and the C wave. So in this case, in going to the upside, we'll still need to work out if we put wave A up here or wave A here. That will be the thing that we'll need to look at that in that particular way. Now let's move into the intradays and have intraday charts and have a little look at this in a bit more detail. So we normally start on 50k, so let's start there. In terms of, in the bigger picture, in terms of this A wave, B wave, and having a C wave down here, I don't think that's the case, because some of the banks, and Goldman Sachs is one of them that I pointed out this morning, is that this low here, they haven't made a low below this previous low here. And there will be other markets like that as well. So the markets still need to make a new low. So I just want to eliminate that thought if you've got that. So we're left with two scenarios, and we need to, as I mentioned, work through them and come out with a solid strategies for being long and short. You know, when the Feds are doing their thing, it's normally buy the rumor, sell the fact. So we could certainly come down in this way. So 1, 2, 3, ABC for 4, down for 1 here, an A and a B and a C for wave 2, and then down for that's just about it at that point there. We'll take a closer look at that as we go forward. Wave 3, 4, and 5 here for wave 1, and then have the A, the B, and the C to the upside here for this. Okay, so that's one move. That would be the A, the B, and the C up there for that. So we'll keep an eye on that. But that's where that can come into. So we'll be looking at these in more detail as we go in. So yeah, so the other count here really is just, let's put Huey, Dewey, and his mates to the side for a moment, and get back to that later. The other count here, as I mentioned, is having wave 1 here. Now, we can look at this as wave 1 here and coming back for wave 2, or we can look at this as wave A here and coming back for wave B. They're both going to be exactly the same pattern, so in a way it doesn't really matter which is which here, but I just wanted to point out that this situation would still need to be resolved. This move up here is an impulse wave, and which is 5 waves, and once it's completed, then it'll have an ABC back, pulling back 50 or 60%, and then moving up again. So in a nutshell, all we need to do is really, once that top is in place, and let's say that you don't know that when that top's going to be in play, but you will know when it pulls back like 30, 40, 50%, then you'll know that you've got a top in. So you can go long above that top. Of course, we're going to improve about that, but you know, when you think about it, if this was going to be the other count where it comes down here, after that 5 waves, it needs to turn and come straight down at that point. So any move above that 5-wave move here is going to be a move towards the 4,000. So in a way, it's really quite simple what we have to do here. So let's continue to drill in, and to understand this on the 10K tick chart here. Let's just have a look what we got here. So on this 10K tick chart, we've got this here as 1 and 2 up here, and 3 and 4 here, and then down for 5 for wave 1 here, and then looking for the A wave up here. And as I just mentioned, this is the 50-60% up here at the 4,000, but as I just mentioned, you know, this is quite big in terms of the size of it, so it may be much simpler with just the A wave coming into this space here, and the B wave coming back 50 or 60% of this move here, and then having wave C up here for that. So it could be something like that more so, but we'll work on that. We'll keep working on it. We don't need to worry about that just yet. And then when we move into the 5K tick here, we're looking at both counts here for a moment. So we're getting in this instance, from this wave 4 here, we're counting down for wave 5 here, and then the A wave here, the B wave over here, and then the C wave up here for that. So the A, B, and C here. In this case here, you can look at this as the A wave, an A and a B and a C for the B wave, and up for the C wave here for this. The cash market and the SPY didn't make a move up here this high. It stayed much flatter, so you could probably look at that a bit differently in terms of a triangle, but we'll look at that a little bit later on. What I want to talk about here is a bit more is this here. It's a little bit confusing at this point, but in a nutshell, we're looking at 1, 2, 3, 4, 5 up here. Okay, we've got 5 waves moving up here. In some of the stocks, they're going to open higher and then probably trade down because they need to finish off a little bit up here. Not all of them, there's leaders and followers and so on. But the main point about just explaining this, and we'll look at this in more detail as well, is just really to understand that there is 5 waves up there, and you can see that nice strong 3rd wave, 4th wave, 5th wave up here. So we can have it as wave C of 2, and if we have that as wave C or 2, then we're going to be coming down from that point. Okay, if we're going to be looking at this to the upside here of wave 1 or wave A, as we just talked about before, then in that case, we're just going to pull back. Let's just put this in here from this high to that low to that high. The 50-60% is down here at just below the 3600 area. So as you can see here, there's really good support at the 36 here. So the chances of it moving down here to the 61.8% are a little bit slim. That's if it was going to be bullish, because if it was going to be bullish, that means that Friday would be bullish and Monday would be bullish, and it would handle this ABC pattern here quite quickly and much smaller than I've got it drawn out here. Okay, so it will be quite, I imagine that if it was going to be bullish, it would just be sort of quite small in a way, and it wouldn't take up too much time, and it will just push up. But anyway, once this moves down here, let's just say that, I mean, I can count the cash market as being completed on that high here, but we'll look at that. So let's just assume for a moment that the market does come down. If the market does come down a little bit down here somewhere, then you can just put that green line across the top there, and you can go long from that point. How simple is that? If you've got a keener eye, then you know that that this market is going to be, this correction is going to be an A wave and a B wave and a C wave. So that will be the B wave, the A wave, and let's just take a bit more of a broader view, and you can see the fantastic support at 36 there. It might just come down to 36.20 or 10 or 30 or something like that as well. But then if you can figure things out, then you can bring it down from that top down to the B wave here. So you have an A, B, and C. between the A and, if you start to see this come down in 3 waves here and you think you should be buying coming in here, well, the next step you could do is take the B wave and the C wave here and try to find the 50% between the two of them. And once you've got that, have a look at the number over there. That's 3650 at this 3630. That's the top of subgroup 1 of 36. So you could start building in trades on that, but if you're a little bit unsure, then you can go to the 61.8% of this move down here, and then if you get support on the 61.8%, then you can start moving in from that point. Or you could gravitate over to the closest largest number, the 3650, and start building on top of that, if with a classic trading levels pattern to the upside. So you want the arrival, the reaction, the first high, wait for that, get the ABC, and then go long over that point. So yeah, that's the long side. So in a nutshell, all you need to know is be patient, wait for the top, bring it down to the second one, and then you can use the trading levels and the classic trading levels pattern to move in over this side. If the market comes down in 3 ways, which it will do at minimum, right, that will be the minimum thing it will do, and then it'll push up. But anything below those 3 waves here, then you can look to go short at that point. But you don't want to go short before the 3600. You really want the 3600 to become the retested resistance. So on this, you want the short side here. So you want the first, if that's the 3600, you want the first low below the level and then the ABC. So you start from the, geez, got to get rid of that dude. No, it's doing my head in. So that low here, then you need that, you know, first low, the second low there. So yeah. Classic trading levels pattern at the 36 here. You want that first low below the level, the retest there. And look, it might be part of this whole thing here, and then, you know, just continue up at that point. That's what keeps you safe. It's not, you know, if it clicks in, well then, you know, it's your lucky day, and then, you know, you can start working at that point, and then look to the closest largest number over here, 36, 35, 50, and start, you know, adding to the position over there. But basically, once you've got 3 waves there, anything below that will be bearish, because a 3 wave will be corrective. Anything below that will be bearish. So that's that there on, that's kind of looking at both sides in a way, you know, that little 5 waves up there will go from 5,000 ticks to 1,000 ticks. And this has just got the bullish count in here, which I just really wanted to go over a little bit. So so from wave 4 up here, we'd look at it as wave 1 and 2, 1, 2, 3, 4, and 5 down here for the third wave. And then the A wave here, and ABC for the B wave, and up for the C wave. Now this C wave here, you know, on the SPY and so on, it didn't really sort of come into play because it's got the futures in it and so on. But yeah, from here we've got a nice 1 and 2, 1, 2, 3, 4, 5 for the third wave, ABC for the fourth, and down for the fifth here with 1, 2, 3, 4, 5. So it makes a nice ABC at this point for wave 4, and then down for wave 5, a 5 of 1, and then we'd be looking at the wave A up here, and then we'd be looking for an ABC pattern here. The 36 is important, but the 30 we've got 35. After number 5 comes a number 8 up here, and when we talk about 8, we talk about group 2. So group 2 is 65 number, 3650, and then 72 here. So will it find support in this area here? We've got wave 1, 2, 3, 4 here, and we'll look at this in a bit more detail, but we'd be looking for an ABC pattern here for this B wave coming down. I'll just put that under the 36 a little bit, because that's what it should be there. The wave A here normally comes back to the wave 4, because you have strong volume in wave 3. Everybody recognizes it, and Jack be nimble, Jack be quick. But once wave 4 comes in, wave 5 is on more of an angle than wave 3, so it's got lower volume in it. So these are the folks that come in last, unfortunately, and they're the ones that will you know, have to ride this out here, and normally they can't survive an ABC correction, so they'll get out, you know, they'll get in up here and get out down here. The value buyers will come in on support here and thinking that it will move up there, but that B wave will fade them out, and then the C wave will clear them out at that point. And then really this is to rebalance this trend here. So it's technical, it's emotional, it's a trip. So that's that. Let's just go, and that will be the B wave and going up for the move up here. So I mean, it's pretty exciting really, because once we come back up here to as an A wave, a B wave and C wave up here, and don't forget this can also be wave 1 here as well, and wave 2 here. It's just something that we will need to figure out, but we don't need to figure it out now. When this what will happen is that the move up here will either be a wave 3 or be a wave C. So normally there will be some correlation, equality between wave A and wave C in terms of length, but if it's much bigger, well then it's going to be a third wave to the upside, and then we'll work it from that point. But this is going to be fantastic shorting season up here. Coming down here, this is what we need to think about what we're going to trade, and you know, perhaps the thing that you normally trade is not the best thing to capture that whole trend to the downside. You know, maybe you need some other market to have a few dollars in that you wouldn't normally trade. You know, because if you're going to short, you want to short the weakest markets. You know, and you might trade indices all the time, but you might want to have a look at you know, what's the weakest sector. You know, what's the weakest stocks in that sector. Wouldn't hurt just to chuck a couple of pennies on that, you know. So let's just go into 100 and understand this trend a little bit further. Let's go into 100 ticks and get in some more data here, maybe a bit more, so we can just have a bit of a look around. This is where we have been here with 1 and 2, and down here for this blue wave 1. And of course the Feds, every time the Feds come in, it's always a bloody shit party, isn't it, you know? But anyway, we can look at it as the A wave here, the A, B and C for the B wave here, and up for the C wave. We can also, I've got it as the B and the C up here for wave 2 and working down at this point. We can also look at it in, you know, this way and wave A and B and so on and move up. But I just wanted to have a look at this here. So just so you've got the count there, we've got wave 1 and 2 here, and then we've got the third wave up here and the fourth wave here, and this is the fifth wave here. So we've got wave 1 to this point, wave 2 to here, wave 3 and 4. Yes, they do over tap a little bit, but that's the thing about large numbers, and you probably think 3650 is like nothing really, but you can kind of see how important it is here. And then we've got wave 5 to the upside here, so we can count from wave 4 to wave 5 of C, or of, well, could be, I've got it as 2 here. It could also be the A wave. It could also be wave 1. So we should see, this looks like 5 waves here, 1, 2, 3, 4, 5, and an A, B, C. So we should see this fade here. So that should be the top there. But I do know with stocks, we still need to go higher. So maybe I've made a mistake somewhere. But the point is that if you see the market cross this line down here, you know, like move down below this line here, then you know that we're in this leg here now. We're either going to come down all the way down here, or we're going to have this as, well, we could look at this as 1 and 2 here, and 3, 4 and 5 here for the A wave coming into the wave 4 of 1 lesser degree, the B wave coming into play here in this way here, and then the C wave in 5 waves coming down into the 36 here. There'll be a nice bounce off that, and then we know that that's the 50-60% retracement level in that little area there. So we can look at it in different ways. We can look at it like this. We can look at it we can look at that as wave 1 and wave 2 in here as well. But you kind of get the picture with this here. So we just got to be a little bit patient to see what we've got here. So this can be 5 waves down for wave 1, and wave 2 here, and then the beginning of this down here for this. So like I said, if you can count the 5 waves in wave C here, anything below that, then you know that it's bearish at that point, you know, and then you can look to go short at that point. So that's how it'll play out. So that does, I checked on the cash market, the SPX, and I could count every single on a 1 minute chart, and I counted everything up here and it's all done. But the futures market could be a bit different, and I know that stocks need to make a bit more of a high as well. But even if we do go higher from here, then you still need to look for this particular pattern here, okay? This is the one that we need to wait to basically get our heads around, and it's basically going long from here and short from here. That's it. So it's simple. All that waffling on there to get to this point. This is the same as Apple, same as all the stocks, same as everything is the same. When markets are in fear, they all gel together because they don't know what's going on, and everybody's looking for inefficiencies and efficiencies, and everybody's looking for answers, you know. So, and it shows up in, these are human beings, you know, this is what humans think, you know, and they're all thinking the same at the moment. So that's that. Let's go and have a quick look at the other markets. I don't need to go into big spills here. We can either look at the NASDAQ with wave 1 here, an A and a B and a C wave for wave 2, and then we come down from this point, and the same thing applies as well. Each market will have different numbers that's working with, so you know the levels will either go up from that point or will end up coming down from that point. That's the thing. So it's nice and simple. We've got a nice 5-wave structure here. It might be, I didn't count this on the cash market. There could certainly be, you know, it could drift up here in the futures, and I'm not quite sure about, I haven't actually pulled that apart, that one. But whichever the case is, you don't want to do anything in the off hours here. You want to make sure that you've got a nice clean ABC. You want to make sure you've got a nice clean top and this here, and this will be the same for the other markets as well. The DJ here, I think it's quite sort of interesting here actually. See, this is one of the things here, this is a bit like Goldman Sachs actually. Now, this, like, as a wave 5 down here, you know, from 4 to 5 to get 1 and 2 here, it hasn't made that low here. Do you know what I mean? It's okay to have a truncated 5th wave, and the Dow is like a dog on a lead these days. It's not the, you know, it's not the B end and all of everything these days, but yeah, anyway, it has had a very nice sharp move up through here. So it does, you know, one would think straight away, oh no, that's definitely the A wave peak. That's, we're in a bullish market here. If you can't see that, there's something wrong with you. Well, I know there's something wrong with me. We're all carrying a cross, but you just don't know. You know, this is what the Fed's, you know, announcements do this stuff. We've been through this, you know, the last 2 times, you know, with the interest rates and things. So anyway, we can have wave B and C of 2, or we can have as wave A here. We'll need an ABC back here, and of course if this can drop below the level somewhere, then you'll be exposed with the top there and you can go long at that point. All pretty simple really, isn't it? So all nice. This would be otherwise if wave 1 ABC for 2 here, otherwise wave 3 here, wave 3 here, wave 4 here, and wave 5 down here for wave 1. Okay, and the same with, do we have the Russell? Did I show the Russell? I don't know if I did. I've just better check. I've lost the plot. So this is the Russell here. I don't think we did show it, did we? Yeah. Anyway, so wave 3 here, wave 4, wave 5 here of 5 of 1, and once again a nice impulse wave to the upside. It's probably wave 1 and 2 in here, 3, 4, 5. So we could probably put that there, I reckon. And it's quite nice as 1 and 2 and 3 and 4 and 5 up at this point, sit right on the 61.8%. But that sort of doesn't mean much, the 61.8%. And also too with these is you don't take the 61.8% from this low down here, you take it from wave 1 here. So that's why that comes in at 61.8% here. Okay, so just to let you know that, if you're looking at this as one with an A and a B and a C up here for that. Or we've got wave A here, so all you have to wait for is that, yes, we could go higher here because I know some stocks need to go higher, or we're going to be drifting from here. If it's going to drift here, it's certainly going to bounce off the 1700 for wave A and then B, and then the wave C might not come all the way down here. If it's going to be bullish, it probably won't come all the way down here. It'll be just something like that, and then go up from that point, and then you can go long from this point. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.